Michael Burry has been extremely bearish on almost all asset classes for years. His prediction of runaway inflation in May 2020 came very early in the economic cycle, before almost everyone else saw it coming, and it was correct. In that call, he simply looked at monetary policy, money printing, and government spending, and saw the unavoidable future outcome. And now he has recently warned everyone about a big market crash, probably bigger than the 2008 housing market crash. Welcome back to Essences. In today's video, we are going to reveal everything about Michael Burry's views on the stock market in 2023. Make sure you watch the video till the end, and remember to subscribe to the channel and hit the bell icon so you won't miss any future videos we upload. He recently predicted that white-collar workers in the tech and information industries were overstaffed, which will result in layoffs, and we can see the same happening in big corporations like Amazon, Twitter, and Meta. There has been a dramatic increase in layoffs across most of Silicon Valley and startups in most industries. So one thing is for sure, when Michael Burry makes a statement, he means business. He now believes that index funds are in a bubble and on the verge of a crash because investors are overexposed to the S&P 500 index with little regard for the fundamental valuations of the individual companies that comprise the index. He believes stock indices will crash in particular as equities as an asset class are unloaded in large quantities as the recession is increasing, which has led to a panic among consumers and businesses. He sees the blind buying and holding of stock market indices as the formation of a new bubble because it lacks the fundamental parameters, and this is the reason that causes bubbles. Michael Burry was also proven correct about his extreme bearishness on Tesla stock and Cathie Wood's ARKK ETF. He was, however, far too early with his long put options on these two bets, and he almost certainly lost money. Burry is always correct, but he is always too early in his position timing. Burry was even too early with his big short for the housing market, but he still made a fortune. As a result, viewing the fundamental forecast for markets can provide insight into what is likely to occur over the next few years. What is Michael Burry predicting will happen? For a long time, he has predicted a devastating market collapse. In June of last year, he referred to the greatest speculative bubble of all time in all things, warning that it would end in the mother of all crashes. Michael Burry predicts that inflation will continue to rise. This statement sounds contrary to what other financial experts believe, but we have said before and we will say it again, we cannot neglect the words of a legend like Michael Burry. In a recently deleted tweet, he stated, "What interest rates are doing, exchange rates globally, central banks seem reactionary and in CYA mode. Rising velocity trumped falling money supply in 1978 to 1979, driving inflation ever higher." According to Burry, the velocity of money is increasing faster than the decline in the economy's money supply. This is his signal that higher inflation will continue, and this is the reason that has historically seen crashes. One of the reasons Burry was able to predict market disasters was the predictability of human nature. Human behavior has not changed throughout history, regardless of technological advancement, and current conditions point to only one thing in history: a major crash, probably even bigger than the 2008 housing market crash. Burry is unimpressed by large stock market rallies during periods of poor economic fundamentals. This allows him to hold short positions for long periods of time when he is correct. Michael Burry tweeted on September 30th, 2022, 13.48% of stocks closed above their 200-day moving average yesterday. The low point in 2009 was 1.2%. The 2020 low was 2.8%. We are currently at levels from December 2007. On Friday, December 22nd, 2022, 38.43% of stocks closed above their 200-day moving average. As a result, price action has a long way to fall before Burry believes the market has reached a long-term bottom that will hold. For those who don't understand it, the 200-day moving average is a technical analysis indicator that is used to check the current levels of any stock or index fund. Stocks closing above the 200-day moving average means that there is still time for the market to make a bottom. But, as Burry predicted, a crash seems inevitable at this point. To conclude everything in simple words, the market has already shown a significant fall, but Michael Burry believes that it is just the start, and the market will correct up to 50% in 2023. So if you're planning to make a big investment in the market, we suggest you wait. What is Michael Burry buying during the crash? To understand this, let's see what Michael Burry is currently invested in. Burry's firm portfolio now contains 60% real estate asset companies, a significant shift from his previous large investments in companies focused on digital platforms or information. This could be his way of hedging against inflation by investing in companies that own assets, have infrastructure, and provide real-world services. In times of inflation, holding a currency for an extended period of time erodes its purchasing power. Burry's inflation forecasts have prompted him to take positions in his portfolio in the third quarter of 2022, rather than continuing to hold short positions on staying in cash with few investments for months. His personal portfolio now contains more than 50% prison stocks, including GEO and CXW. Both of these companies are involved in private prisons and mental health facilities business. This alone reveals a great deal about how he views the economy. Is he concerned that hyperinflation will force people to steal or engage in criminal activity? Are prison stocks the best way to invest in 2022? What do you think about this? Let us know in the comments section below. He has put his money where his beliefs are, which has led him to believe that prison stocks are currently the best capital investment. Not only this, but as we all know, he made hundreds of millions in the 2008 crash, and now believes he can turn those millions into billions by betting his money on the upcoming crash. This tells us the severity of this crash and how much a legend like him believes that a crash is inevitable in 2023. To be precise, Burry manages more than $290 million in the stock market, but a simple Google search will tell you that his current holdings are only $168 million. So where is he investing the rest of the money? Well, according to sources, he has bet against long treasuries by investing in an ETF that shorts treasuries. In simple words, he is planning to invest his money in an ETF called TBT, which shorts treasuries. The logic here is fairly straightforward. Long-term interest rates are historically low, and based on his observations about the world, Burry believes inflation will continue to accelerate. People will sell treasuries as a result of this. Volatility will increase as interest rates continue to rise due to rising inflation. A combination of increased volatility, decreased liquidity, and decreased market depth is a lethal combination that can send bond prices skyrocketing. Furthermore, in an ostensibly illiquid treasury bond market, the United States is issuing twice as many bonds as it did prior to the pandemic. In short, there aren't enough buyers for treasuries as the US issues more of them, and large participants like US commercial banks, foreign governments, and life insurers are avoiding them due to rising interest rates and large financial losses. Financial institutions are also hesitant to enter due to regulatory concerns. Companies also appear to be hoarding liquidity in order to make cheaper acquisitions or to buffer against a possible earnings recession, resulting in a low price for treasuries. Therefore, it simply becomes logical to short the treasuries, i.e., sell the treasuries in advance and make a profit when the price hits the bottom. And this is exactly what Michael Burry is planning to do with the rest of his money, which further makes his claim of a big market crash seem more logical. With this, we've come to the end of this video. We hope you now understand Michael Burry's view on the upcoming crash. Let us know your views in the comments section below. Please don't forget to subscribe to our channel and hit the bell icon to watch more educational finance videos like this. We'll see you in the next one.